News that Elon Musk has had his Tesla Pay blocked by a judge. According to a decision in a Delaware court, the Tesla chief executive's record-breaking $56 billion pay award will not be reinstated.
I'm a big believer in tariffs. I think tariffs are the most beautiful word. I think they're beautiful. It's going to make us rich.
The role of M&A in corporate recovery strategies. In the theater of corporate strategy, uncertainty often acts as a storm, threatening even the strongest businesses. Yet, within this chaos lies an opportunity for transformation, epitomized by mergers and acquisitions, M&A. These are not mere transactions. They are strategic reinventions, enabling companies to rise stronger from adversity. M&A redefines market positions, offerings, and operations, blending resources like an artist creating a masterpiece. Strategic acquisitions unlock new markets, diversify product lines, and lay the groundwork for sustainable growth. During financial strain, M&A provides a lifeline, achieving economies of scale, operational efficiency, and resilience. It also adapts companies to evolving technologies and consumer trends. M&A revitalizes brands and rebuilds stakeholder confidence, signaling innovation and leadership. Success requires meticulous planning, cultural alignment, and visionary leadership, like conducting an orchestra to create a harmonious organization. Navigating M&A transactions during economic downturns. Navigating M&A during downturns is like steering a ship through a storm, challenging yet filled with potential. Economic challenges reveal hidden opportunities, undervalued assets, and strategic partnerships. Patience and long-term vision are critical to capitalizing on these prospects. Due diligence acts as a compass, evaluating resilience, adaptability, and synergies. Creative deal structures, like innovative financing or risk-sharing agreements, become crucial sales, ensuring mutually beneficial outcomes. Transparent communication anchors stakeholders, fostering trust and alignment. Post-merger integration tests leadership and focus, uniting cultures and processes to unlock value and realize the transaction's potential. M&A during downturns isn't just about survival. It's a bold declaration of resilience and future growth. Leveraging M&A for competitive advantage in crisis. In the theater of global business, where crises can unsettle even the mightiest enterprises, leveraging mergers and acquisitions, M&A, emerges as a masterstroke. This strategic maneuver enables companies to not only weather storms, but also emerge more robust, agile, and better positioned for growth. Crises, while disruptive, present unique opportunities, undervalued assets, distressed competitors, and untapped market gaps. Companies adept at recognizing these openings can transform challenges into springboards for success. However, this requires a strategic alignment of M&A activities with long-term objectives, ensuring acquisitions strengthen the company's core structure and future resilience. Due diligence during crises demands heightened scrutiny. The stakes are higher, and the margin for error is slimmer. Companies must thoroughly evaluate potential acquisitions to avoid unforeseen vulnerabilities, treating this process as navigating a minefield that requires precision and expertise. Financing strategies during crises call for creativity. With traditional funding often constrained, businesses may explore leverage buyouts, earn-out arrangements, or partnerships with private equity to structure deals that balance investment with caution. Meanwhile, transparent and empathetic communication with stakeholders, employees, customers, suppliers, and regulators becomes critical to build trust and alignment. Post-merger integration is where the competitive edge is truly tested. Successfully aligning cultures, systems, and processes ensures the envisioned advantages are realized. Leveraging M&A during crises is not merely a survival tactic. It is a declaration of resilience and vision, a transformative step toward enduring success. Case studies, M&A, as a response to crisis. M&A has historically been a strategic tool, but during crises, it becomes a lifeline. Examining past successes reveals how companies have turned adversity into opportunity. Disney's acquisition of Marvel, 2009. The entertainment industry faced digital disruption, and Marvel struggled to capitalize on its intellectual property. Disney's $4 billion acquisition provided Marvel with global distribution and brand management expertise, creating one of history's most successful franchises. This merger showcased how M&A can rejuvenate companies and redefine industries. Exxon and Mobil merger, 1999. Amid plummeting oil prices and industry challenges, Exxon and Mobil combined forces to form ExxonMobil. This merger enhanced operational efficiencies and created a market leader capable of withstanding economic turbulence. It exemplifies the resilience achieved through strategic consolidation. Facebook's acquisition of Instagram, 2012. Recognizing the rising influence of mobile photo sharing, Facebook acquired Instagram for $1 billion. This preemptive move neutralized competition and significantly boosted Facebook's platform appeal. The acquisition demonstrated how M&A can anticipate and mitigate emerging threats while seizing growth opportunities. These case studies highlight key success factors: strategic alignment, rigorous due diligence, and meticulous integration planning. They underscore how M&A transforms crises into catalysts for growth, ensuring companies emerge stronger, more innovative, and better equipped for the future. Post-crisis integration and stabilization strategies. After navigating the storm of a crisis, the journey to stability begins. Post-crisis integration and stabilization are critical to ensure long-term growth and resilience. Defining a shared vision. Leadership must establish a clear vision for the newly combined entity, aligning teams and objectives toward a unified purpose. This shared vision becomes the guiding star for all integration efforts. Strategic integration of operations and teams, blending systems, processes, and cultures requires a deliberate approach. Streamlining supply chains, consolidating IT systems, and fostering collaboration among teams ensures operational efficiencies and cultural cohesion. This phase demands precision and care to create a unified corporate culture. Transparent communication, ongoing dialogue with stakeholders is essential to build trust and confidence. Clear communication fosters unity and ensures alignment with the company's direction during the integration process. Financial stabilization, restructuring finances. Post-crisis ensures a solid foundation for growth. This might involve refinancing debt, reallocating resources, or prioritizing high-growth opportunities. Financial stability is key to withstanding future challenges. Fostering innovation. The post-crisis phase is an opportune time to explore new markets, develop innovative products, or redefine business models. Leveraging new capabilities gained through M&A can drive bold initiatives, positioning the company for long-term success. Resilience and adaptability. The path to stabilization requires leadership and teams to remain flexible, learning from challenges and adapting strategies as needed. This phase is about building a stronger, more cohesive organization ready to navigate future complexities. In the narrative of corporate resilience, post-crisis integration and stabilization mark the transition from survival to renewed growth. Companies that navigate this phase strategically not only recover, but thrive, transforming adversity into a foundation for enduring success. In the intricate dance of business survival and growth, crises serve as both challenges and catalysts. By leveraging mergers and acquisitions with foresight and precision, companies can transcend adversity, transforming vulnerabilities into strengths. Success lies not only in seizing opportunities, but in the meticulous integration and bold strategies that follow. For those who master the art of navigating M&A during turbulent times, the reward is not just survival, but a future defined by resilience, innovation, and enduring success.